Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Waste Connections' latest proxy statement. This isn't just some boring document filled with legal jargon. Think of it as a treasure map, only instead of gold, we're hunting for insights into how this garbage giant is run. Will we find hidden riches or just a bunch of trash? Let's find out. Let's start with the letter from the president and CEO, Ronald Mittelstadt. He emphasizes relationships and results as being key to their accomplishments in 2024, saying strength and consistency drove value creation. It's always interesting to see how the CEO frames the year. So what exactly does Waste Connections do? They're in the business of non-hazardous waste collection, disposal, and recycling. They operate in 46 states in the US and 6 provinces in Canada, serving about 9 million customers. The company's big on environmental, social, and governance efforts, or ESG, which they see as crucial for long-term value. Reducing emissions, upping recycling, and improving employee safety, things like that. Now for some numbers. Waste Connections highlights its dividend growth. Since 2010, their annual cash dividend has increased at a 14.1% compound annual growth rate. That's a pretty solid return for shareholders. Okay, what are the big items shareholders are voting on at the annual meeting? They're electing 8 directors, having a non-binding vote on executive pay, and approving the appointment of their accounting firm, Grant Thornton LL et. Pretty standard stuff for these meetings. Let's talk about corporate governance, how the company runs itself. The board has a big role in risk oversight with different committees handling different areas. The audit committee looks at financial risks, the compensation committee handles pay-related risks, and the nominating and corporate governance committee focuses on compliance risks. It is important that all committees are composed of independent directors that are not part of the company. One interesting detail is that the non-employee directors meet separately without the management present. This is a good practice to ensure independent oversight. Waste Connections has an insider trading policy that is supposed to prevent directors and officers from profiting unfairly, for example, buying stock after hearing about a great earnings release before the public does. These policies prevent from short sales and holding securities in margin accounts. The company has a majority voting policy for directors in uncontested elections, meaning if a director doesn't get more for votes than withhold votes, they have to offer to resign. It's a mechanism to hold directors accountable. Now, about board diversity, it's the position of the board that diversity, including gender diversity, is an important consideration. They want a mix of skills, expertise, and experience, and they consider diversity when picking senior management too. Let's meet the nominees for the board. We've got Andrew Bertone with experience at Duke Energy, Edward Gialle from Procter & Gamble, Michael Harlan, the current chairman of the board, and Elise Jordan, who used to be with FedEx. Then there's Cherilyn Harley-Lebon with a background in law and government, Susan Lee from Suncor Energy, Ronald Mittelstadt, the CEO himself, and Carl Sparks, who's been on several public company boards. It's a diverse group with experience across different industries. Here is an at-a-glance table summarizing every candidate's skills and experience, showing their nationality, age, tenure on the board, and whether they are an independent director. Now, how much are these directors getting paid? They get an annual cash retainer plus deferred share units or DSUs. Committee chairs get extra cash, and the non-executive chairman gets a supplemental annual retainer of $50,000. Who owns a big chunk of Waste Connections? The Vanguard Group holds over 28 million shares. The stock ownership of company executives and board members can give you an idea how the management and board are aligned with the company's success. Here's a table that outlines their ownership. CEO Ronald Mittelstadt owns over 35,000 shares. Now for the juicy part, the executive compensation. Let's look at the summary table and see what the top folks took home. In 2024, CEO Ronald Mittelstadt made a total of $7.27 million. The CFO, Mary Ann Whitney, came in second with a total of $2.54 million. Followed by Chief Operating Officer Daryl Chambliss with $2.5 million. Patrick J. Shea made $2.30 million. And finally, James Little with $2.11 million. There's a table that shows how many shares each of the non-employee directors hold. This is important because it means they need to worry about what happens to the stock price, just like the rest of us shareholders. The report then goes on to discuss about certain relationships and related transactions, listing previous employments, etc. But the long and short of it is that I see no issues that would concern an investor. The management of the company is not aware of any material interest, direct or indirect, of any informed person of the company. It's just a disclaimer. To maintain objectivity, the audit committee has a policy requiring advance approval of all services performed by their accounting firm. Here's another juicy financial table. It shows the auditor's bill for various services. Here we are shown graphs illustrating just how closely executive compensation actually paid aligns with the company's total shareholder returns, net income, and adjusted EBITDA. For example, if the company's net income rose, so did that of the executives, all very important to the investors to have alignment of incentives. Now, let's step back and give a final grade on this report. Waste Connection seems to be heading in a solid direction. They are growing and their financial numbers show they're doing pretty well, which is good for investors. Management is trying to create a workplace where everyone is valued. Still, no company is perfect. Here are some things to look out for. There's a lot of competition in the waste disposal business, which could put pressure on their prices. Changes in environmental rules could cost them money. Finally, if they can't keep their current agreements with cities and counties, that could hurt their business. Overall, Waste Connections looks to be in a good spot. They've got a handle on their business, their finances are strong, and they seem to care about their employees and the environment. Keep in mind, all investments have risk, so take it all with a grain of salt, but from my perspective, it is a fairly solid company. Thanks for watching. If you found this helpful, please subscribe, like, and leave a comment. What else should we decode? Let me know.